Hi guys, this is a official market crash warning from 13 Market Moves. We're projecting a huge drop in the market in the next 72 hours. I'm recording this at about 1 o'clock on March 23rd, 2021. Expecting an easy drop, about 150, 200 points on S&P 500 futures after they failed to break above this key level of 39.33. Now, we've alerted all of our subs to go heavy on the put positions. One key characteristic I want to bring to your attention of this market in the last 72 hours is the fact
CTLT seen a spike in volume here.
Is the fact that dollar has been steadily climbing higher over the course of the last 4 trading days. So let me bring up this 3-day, 3-minute chart so you can visualize this. Dollar's been climbing steady on this chart, while some other things have not really caught up to the fact that dollar can actually break above a very important level of 92.5. And if dollar does indeed stage that breakout by the end of the day, we're going to have huge move lower in gold. We're going to have huge move lower in Bitcoin. We're going to have huge move lower in S&P 500 futures. Now, the story in the market right now is buy those cyclicals, buy industrials. So the herd is so hypnotized by these crazy wild moves in obnoxious stocks that are on the verge of bankruptcies like RCL. Now, we've been heavy short RCL over the course of the last few weeks, and it's making a move right now, guys. When you wake up tomorrow, it's going to be trading under 80 bucks. And so, since I'm recording this at 1 o'clock, you guys probably have plenty of time to jump in on some of these trades. But don't expect just a small move. This is going to be a rather sizable move. Stocks like RCL that failed to break out above certain levels on the chart. Basically, we have multiple charts screaming at us at the same time that the market is about to make a short-term, very sharp move lower here. Now, let me explain this on the charts to bring some light. And you probably know that if you've been following the channel closely, about a week ago, I posted 3 charts that I said were going to be leading indicators of what could be taking place in the market next. And since then, let me pull up the 5-day chart here to help you visualize this a little bit better. So this was the head and shoulder formation in Bitcoin that we referenced. Clearly, the general consensus is Bitcoin can do no wrong. It can only go higher from here. But the bottom line, Bitcoin is going to drop to a level of 44,000 in the next 5 days. It could happen as early as tomorrow when you wake up. Bitcoin could be at 44K. Now, the question to follow up with on this observation is Bitcoin typically predicts or just runs ahead of the market. So if Bitcoin was to make that move over the course of the next 48 hours, the markets would be trading down substantially lower. We have circumstances where GME is going to report earnings tonight, and GME is going to make a wild crash lower, guys. It's going to break below this level of 172. Shit, we could take up to GME tomorrow under 100 bucks. Now, all of these things are coinciding at the same time. Now, one of the most important observations over the last 7 days is the fact that oil prices are breaking down. As you can see right now, we're heading to the new lows of the day on oil. Now, why would this be taking place if we're reopening the economy, right? The biggest move in oil came in last week when we dropped from like level of about 65 all the way to 58, and we just sliced through that low that we set on Thursday in oil. So why is oil dropping? I've let our subscribers know, all our alert members, all the guys I trade with last week, that this trade looks very, very interesting because oil should be doing exactly the opposite of what it was doing right here. And this was just the initial move low. As you can see, it tried to bounce 1, 2, 3, 4 times, set up a multi-top after a substantial drop, and it's following through on a further drop. I mean, you can easily see oil at about 51, 52 bucks over the course of the next week or two here. So, however, if this sell-off in oil intensifies, all of your stocks, I've touched based on RCL, clearly. all of your reopening stocks, Wynn Resorts, all of your, BKNG travel stocks. All of these stocks, guys, they're destined to head substantially lower. So use this indication in oil. It's a huge divergence, and short the hell out of what everybody else is telling you to buy. So all of these cyclicals, all of these travel names, all of these reopening names that Wall Street, CNBC, Bloomberg has been trying to brainwash you and tell you to go ahead and load up on them. It's been such a popular trade, and I can tell you one thing from a psychological standpoint without even showing you any charts, is the fact that when everybody's blindly buying a particular sector or a particular stock, at the very early signs of a break lower, people are still questioning and want to buy the dip. But when the continuation move lower happens, everybody is getting out at the same damn time, which makes for a highly lucrative situation if you are a short seller. So take advantage of these situations. Look, this move in DE from 392 to 360, took place over the course of just a few days. And so we've helped our traders nail some crazy trades over the last few days, such as Amazon. We're buying these Amazon puts right here, guys, right after Federal Reserve meeting announcement on Wednesday night. Well, everything looked like it could go nowhere but higher. So we shorted Amazon right here at 31.70 area. And guess where it's at today? So after we've collected some solid profits on Amazon, dropping about $170 within literally 48 hours, Amazon went higher on very, very light volume and it's at the same level, representing the great entry opportunity on the put side. Most of the people are confused about the markets right now because they've been so brainwashed with the cyclicals, industrials, buy. They're like, oh shit, why is everybody selling them today? And people like Jim Cramer, if you watched his show yesterday, guys, what did he say? Oh yeah, if that shit dips, buy it. Well, today he's going to be telling you to sell that shit and lighten up and maybe wait for a better opportunity on the entry on the call side, okay? This market is about to make a sharp move lower, guys, and you don't want to be caught up in this situation buying dips. What you want to be doing is profiting from sharp pullbacks with short-term options expirations. And if you're not sure how to do that, make sure you click the link below, schedule a 20-minute coaching call with a senior trader here. So to basically summarize this, we've noticed that Bitcoin last week was not acting right, even though the price drop has not been substantial. But it's the behavioral pattern in Bitcoin that basically raised the red flag that there's a huge move lower that's coming. And at this point, this head and shoulder pattern, it's very, very attractive from the standpoint of shortiness. Where I want to talk about next is the fact that Tesla, I want to propose a question of the day is, where the hell are Tesla shares going to go if Bitcoin first drops to 44,000? That's question one. And sub-question to that question would be, what would actually happen to Tesla shares if Bitcoin breaks the 44,000 level and it actually drops even lower to, let's say, 30,000? Well, let's say that the average cost where they bought $1.5 billion of Bitcoin was around 38-40K. If Bitcoin drops to 30, which it looks like it's just about to begin that move lower, Bitcoin at 30K, guys, Tesla could be trading at 350, 450. And let me explain this to you. All right, based off the chart is one thing, but just pure logic here is nobody's been paying attention to this great investment that Tesla has made in Bitcoin, which literally almost doubled. If it not doubled, it probably, at least they made a 50% return short term on Bitcoin, but it didn't help the price of Tesla shares. Now, the market didn't want to focus on that, but I promise you it will focus on it, on that part of the Tesla story when Bitcoin makes a sharp drop lower. And it will be certainly noticed by the market if Bitcoin drops below the purchasing price or the average cost at which, you know, Tesla's been accumulating Bitcoin, which generally I think it's been described as between 38 and 40K roughly. So if Bitcoin drops to 30K, I mean, it's going to have a substantial negative impact on Tesla. As you know, Cathie Wood, what I call her Joan of Arc, yesterday said that she's raising target price on Tesla. Of course, that's her long-term target price, but typically on news like that, Tesla would rocket substantially higher. So her price target on Tesla now is $3,000, and what happens? The stock barely moves. It creates this nice move 11 formation, and it resembles another smaller size move 11 right now. Typically, these moves back to back, hitting the same level right here, will resolve in a move lower. So Bitcoin could be the next catalyst if Bitcoin makes a sharp move. Now, if Bitcoin continues gradually sliding, such as maybe losing a couple of $1,000 a day over the course of the next 7 days, yeah, that's 14,000. That still puts us above 40K though on Bitcoin. So that may not be a substantial driver for a Tesla share price lower. But if Bitcoin makes like an $8,000 move lower, sharp move lower, followed up by another 8,000 sharp move lower over the next couple of days here, you'll definitely see Tesla not just at this 624 level, but as we accurately predicted, it was going to drop in, let me show you this level here. Let's go into 10 days. I mean, we can easily see Tesla not just actually at 577. Look, Tesla can go straight down from current level of 667, go straight down to like 480, 490 bucks in the next 5 days. Very important stuff, guys. Where the market is right now, it is entirely creating this head and shoulder formation with the top being at 39.78 right after the announcement of the Federal Reserve on Wednesday. And this is when we're actually buying puts on the market itself, on SPY puts, S&P 500 puts, and so on. And what happens is a strong reversal in sentiment the next day, which in our 13 market moves formula would describe as a 10-3 sequence. 10-3 sequence is highly bearish because what appears at first to be a highly bullish sentiment, the market rethinks it the next day, and we get exactly the opposite move directionally. And when that lasts with another gap down the following day, okay, sometimes the market can pause, as it has done on Friday and Monday. But if it can't make a sharp move higher within 48 hours after that, guys, you go nowhere but lower. And considering this beautiful move 11 that we've made, if you combine the pre-market and after-market action over the course of last 24, 48 hours here, guys, we're going straight to 38.90. I mean, we could be getting there in the next 2 hours. While I'm recording this and posting this video, guys, in the next 2-3 hours, I mean, you're watching this video maybe at 5 o'clock today, you're going to look at these S&P 500 futures. I mean, we could be on the 3,900 by that time. We could be at 38.90. The question is, if you're watching this at a later time today, what should you be doing? Is that move going to be over? Because it looks like there is a strong support line right here. Well, the short answer is no. Because what the market has not done last time when we moved here to 38.26, only a certain fraction of the market has gone through what we call a flush, like a sharp sell-off followed by a sharp move higher. Now, the rest of the market has not gone through that yet. So watch out for this level of 38.26 because there is a chance we're going to go straight through it. And it's going to be lightning fast, guys. So if you fall asleep, I mean, watching the news, okay, you're probably going to miss this move because this move lower that I'm trying to predict and describe to you, that's going to take place here. This move lower, guys, that I'm trying to describe to you, so you can tremendously benefit from this, is actually only going to last for a few days. So yes, there will be a buying the dip opportunity. You just don't want to be buying the dip right now. And just to make a point, guys, I'll show you my position that I opened just literally 2 hours ago. As you can see, I'm carrying 408 puts on S&P 500 futures. As you can see, my average cost, I've accumulated the position of these 408 contracts at an average cost of $1.36. And if you look at the strike price, they're 38.60s. So they're 38.60s. I mean, we're way out of the money, right? I mean, when I was buying them, we were right here at a level of about 38.30. I mean, we only dropped about 9 points so far. But clearly, I would not be buying a 38.60 contracts if I thought the market could only drop to 38.60. I'm buying 38.60 contracts because I do believe that the market will break below this level right here, which was 37.75, which was the low on Friday. I think we're going to slice through it. And not only that, the next stop is going to be somewhere around here, 38.20s, 38.30s. But we may not even stop there. We may go straight down, okay, in the 3,700 handle on this S&P 500 future. So, guys, lots of crazy stuff happening. You got GME crash after hours. You've got oil crash that is happening right now. You've got a combination of them unloading stocks, and you know, not just the technology stock is what we've seen they've been unloading in the last couple of weeks, but now they're also unloading the cyclical stock that's been the hot popular trade. And so we are now going into a circumstance where it's no longer, okay, which sector are they taking money out of on certain days and which sector are they using that money to buy. At this point, we're going to have all sectors selling off at the same damn time. And that's what creates some remarkable market opportunities. So just don't get caught up in the midst of a bunch of calls here. Don't get caught up in you know, don't miss this opportunity, guys. Again, this is lightning fast move, okay? You know, it's going to crash this week, and next week nobody's going to remember about that shit, okay? Next week they're going to be talking on CNBC, oh, well, is it time to, I mean, we're going to revisit the lows. So let's say the low is going to be 37.50 in the next 72 hours. So next week on CNBC, they're going to be talking, after the market is already bouncing a little bit, they're going to be talking like, oh, we're going to revisit the low. When you hear that, you know for a fact you should be switching into calls. All right, so basically, let me review this real quick one more time. You know exactly where we are. As far as, you know, the 10-day chart, the few small charts I was just showing you guys on 3-day, 3-minute, 1-day, 1 minute, and so on. But to help you visualize the picture here. All right, so now we're looking at this circumstance right here on S&P 500. We're looking at the daily chart, which covers this from October till now, October last year till March 23rd today, 2021. Basically, what you got here is a big middle finger action. So as you can see, the volume, we call it the big middle finger action because it basically tells you, you know, tells the bulls to basically fuck off, literally. And when you notice this middle finger action right here, guys, it's not time to buy the calls. What it really tells you is that the sell volume outpaces the buy volume at the top at such a pace, it's impossible for the market to actually make a move higher. Also, when it coincides with what resembles here of a potential cross between a black line and a crossing the orange line on the way lower, guys, this is a circumstance you definitely want to pay attention to, especially when it happens right after this middle finger action. And when you look at the RSI, when things just don't, okay, the market has a chance to break out higher if the RSI maybe jumps above 70. But that's not going to happen given these other criteria that we're observing here. Okay, same thing if we take a look at Nasdaq, for example. What I'm trying to show you here is basically it's not just a one particular sector that's about to sell off. We're going to see the entire market sell off here at the same time. And here, take a look at this chart. So, I mean, this is a highly bearish chart. This is a head and shoulder formation, okay? And the key area here to pay attention to is the fact that after the strong sell-off last week, Nasdaq is unwilling to bounce above the blue meaning above the moving average line. And despite of what appeared to be a rotation earlier in the morning today, where it looked like, oh, okay, so they're selling the cyclicals and industrials, and now they're back buying maybe the technology stocks. That's not the case. Yes, they're closing down Europe again. It would make sense for technology stocks to go up, but watch, they are about to sell absolutely fucking everything. And the only thing as the result that will go higher is the dollar. So the dollar moving higher is actually a negative for the market. So when you see dollar go up, in most of the instances, not like whether the dollar goes up like 10 cents higher, 10 cents lower, when it makes a substantial move, and we're getting pretty close from everybody being so bearish on the dollar to where it's actually creating a series of higher lows. And that's, in a way, it's a small uptrend that's been forming over the last few months. And the key level to watch in the dollar is 92.5. If we break above that, guys, hey, Bitcoin will crash. Oil will crash. A lot of things will collapse. S&P 500 will collapse as a result. Okay, but if you're trying to place these trades, making these observations, okay, and you're not sure maybe what are the stocks that's going to produce the most, guys, that would be the reason to click the link below this video, schedule a 20-minute coaching call, ask some of these specific questions. Okay, so which stocks are going to produce the best results? Clearly, to put on the trade, you would need to know the strike price, the expiration, the ticker, exactly all the details that you need to know in order to put the trade together. So if you're not sure where to start, if you kind of know, but you're not able to take 3K to 25K yet on your own, it's just in just a matter of a few days, you definitely want to schedule a coaching call, guys, and make sure you get some of the questions that probably you're facing with right now. Make sure you get these questions answered. So basically, we've got a potential strong breakout in the dollar, while we're going to have potential strong move. I'm going to show you one chart. And now, this is the chart of Bitcoin to dollar. And there's one chart that recently looked really, really close to this that just literally made a huge 15-18% move lower. And actually, that would be the chart of XU100, which is Turkey. And so this is how this chart of Bitcoin is likely to look in the next 72 hours. So the chart looked highly positive. In Turkey, look, everything was above the blue, but this multi-top formation formed. In the case of Bitcoin, it's more like a head and shoulder. When we take a look at the closer time frame, you see the cross right here. Guys, this is what is about to happen to Bitcoin. Huge directional move from being highly, highly bullish to all of a sudden we get this trend reversal opportunity and stuff just starts collapsing. This is how Bitcoin is going to look. This is how Nasdaq is going to look. This is how S&P 500 is going to look. But some individual stocks will even look better than this from the standpoint of shorting opportunity. So get ready, okay, to trade on the put side for the next few days and get ready to nail that bottom, because there will be time to buy calls as always. So again, with any questions, click the link below, schedule a 20-minute coaching call. I'll catch you guys on the next trade soon. Let's roll. Make it happen.